Oh, it's back to work. Back to work we go. Hope you guys had a fantastic day. I missed you last night, by the way. Hope you guys made some money on this beautiful drop this afternoon. Boy, that was fun this afternoon, wasn't it? Well, it's about that time of day again. Time to get back to work. Friday is right around the corner, and boy, do we have a lot to talk about on this very important video newsletter. As always, I'm going to cover all my favorite trades in tonight's video to make sure you have a game plan to make some money tomorrow. We have a lot to cover before we jump in though and get this party going tonight. As always, make sure you subscribe to our channel that we don't miss tomorrow night's video upload. And if you enjoyed the video tonight, do me a favor, will you hit that like button for me? And as always, drop me a comment, right? Give me a shout out in the comment section below. Always appreciate you guys tuning in and supporting this YouTube channel. But enough of the intro, Joe. Friday is not going to trade itself. We got some money to make going into Super Bowl weekend. I can't believe the big game coming on Sunday. Anyways, we got some money to make first before we enjoy the weekend. Boy, I'll tell you, the S&P and the Nasdaq are bearish, right? What a difference a day makes, right? Last time we spoke, we're pretty much overall bullish, right? But nah, not anymore, right? Very big moves down on the S&P and the Nasdaq. Now, anytime we see strong moves like this, we're looking to short the bounces, right? We're definitely looking to short the bounces. There's a couple reasons why, and we'll talk about this tonight as we go deeper into this video. There's a couple reasons why these bounces could be pretty strong, right? They might be pretty strong, right, here in the pre-market. And so trying to time your entries, right? Trying to pick the perfect entry off that high. I'm going to give you guys a really stupidly simple way to pick the perfect top, right, on these pullbacks. So if you like making money, you're going to want to stay tuned on this. I also think too, between you, me, and YouTube, I also think too there's some ways to make money on these bounces. So if you're looking for a way to make money on the bounces going higher, I think we can play this market both sides overnight, pre-market, into tomorrow. I'm pretty excited about it. So we'll definitely talk about that on the video here tonight. I'll tell you, oil right now, bull market into a range on oil. We have a lot of potential for a pendulum swing breakout. Boy, that $80 a barrel looks like buyers are looking for it. And we've got some great spots right now for some bear traps as well. So lots of buy setups on my radar for the oil. And I'm going to talk about tonight, there's kind of one big reason why I wouldn't quite count the sellers out just yet. We'll talk about that one reason why a reversal on oil is definitely still potential for tomorrow. And we'll talk about how to make money if we do get that reversal here on the black gold, the oil futures, right? So we're going to cover, don't you worry, by the time we're done tonight, you will have a roadmap to make a killing on Friday. Now, speaking of Friday, let's not forget, there is one news event we have to be aware of for tomorrow. And it is that consumer sentiment number at 10 o'clock Eastern time. It's not marked as a big number, but remember, these consumer sentiment numbers on Fridays right now, they have that little piece of the report regarding inflation outlook, which is really the big trigger that's moving these markets. I'm not sure if you recall, but last month, right, 1 month ago, this number really moved these markets around for us. So that would be the time I would definitely be looking at the clock for tomorrow. Also, too, tomorrow is a Friday. And if you watch my videos, you probably know what I'm going to say. Friday mornings, my goal is get into trades relatively early. Got to have a good reason to be getting into stuff after 11 o'clock Eastern time. Get into trades early and try to leave a runner. Right? One thing about Fridays is they love to run. They love to float, right? Or drop, right? Because of the low volume as traders go into the weekend. So in early, try to leave a position on, see if you can get a little juice out of it, right? That way you can buy all the beers, right, during the game on Sunday. So 10 o'clock is the big news tomorrow. Get in early, try to hold something, right, into the close. I'll tell you, we've had a couple days where you can make your entire week, your entire month on that big move on a Friday afternoon here. All right, back to our charts though, because in all reality, we know we got some news tomorrow, but the charts are where you make your money, right? This is where we get our trade signals, where we make our money on. Now, guys, I'm gonna go over each of these markets. I'm gonna talk about my favorite trades on each of these markets. If you like making money, if you want to grow your account consistently each day, I would make sure you watch all the way to the end, because every trade I talk about can be applied to your market, right? What I talk about on the S&P can be applied to the Nasdaq. What I cover on the oil, you can apply to the S&P. So don't just go clicking off after your favorite market, right? I'll give you a reason to stick around all the way to the end. Let's go S&P. Let's go Nasdaq, and we'll wrap things up here, of course, right? Wrap things up on the mighty oil here for tonight. A couple things here, 3 things. First of all, these are all tick charts. These are all tick charts here tonight. You can always see time frames in the upper left-hand corner. This is the 21 EMA, the exponential moving average. And don't forget, too, I like to give you guys additional chart time frames down the description of the YouTube video, right? This is an 8,000 tick chart, but I'll tell you, we've got some very interesting 60-minute time frames, 4-hour time frames down the description of the YouTube video, and that will give you some context, right, of kind of how I'm gauging sentiment and bias. So I would definitely recommend grab those links in the description. They'll be a great companion, right, for this video here tonight. All right, what's the most important factor that we have right now? There are probably 3 key factors that are giving me kind of an idea of where my favorite trades are for tomorrow. One of them is this overall bear bias. We have definitely now officially turned the corner now, and now the 60-minute time frame looks a whole lot more bearish than it does bullish, right? Just a few days ago, we were still pretty bullish, right? Holding up those lows. Now on the 60-minute time frame, you can see down in the description, both the Nasdaq and the S&P have rolled over, and now it makes it more difficult to justify being a buyer. Next up, strong move down, right? That's a really big part of this. Anytime we see a strong move in one direction, what do we expect? We expect a relatively deep pullback to attract in more bears. We expect a retest of the low, and at that low, we expect either a reversal, right? Double bottom reversal, or we expect a breakout, right? Going through that low. So that's a really big factor in this, right? That kind of tells us to short the bounces, as you can see here right now. And the third thing, right? The third aspect right now is, and this is where I feel bad I wasn't here last night on the video last night, but last night we ended the day with a trading range. And so it was a bear market into a trading range. Notice how we pop up and we roll all the way down, right? Remember, ranges are balanced markets. And so the amount we go above the range is oftentimes the amount we go below the range. And you'll notice the Nasdaq and the S&P tonight are sitting right at pretty clearly what we call a pendulum swing support level. Now, that's not the only thing this range tells me. The range also tells me that the underbelly of these ranges, they love to act like breakout pullbacks, right? They love to come back and kind of kiss the underbelly of those ranges. And so you kind of put all this stuff together, right? We're overall bearish, nice strong move down, but I'm sitting at, I'm sitting at some support levels. So my favorite trade for tomorrow is I'd like to get that nice deep pullback and back down to retest the low. And like I mentioned earlier, I think there's also money to make, right, on the way higher. So for example, right, how would I make money going higher here right now? We're at support, right? But we're very bearish right now. The way you make money as we go higher is you buy bear traps. Now, we talk a lot about this in our free trading course, right? What's a bear trap? So basically, as we try to pull back here now, the bears come in, they try to short this thing. They're a little bit too low though, right? Most likely, again, we'd like to get a deeper pullback because of things I've talked about already. This is where there's money to make, nice strong signals, and we'll talk about entry signals in that free trading course. But as we're going higher, right, think about now, bears coming in, shorten it. Going higher, shorten it. And you'll see buyers come in and they'll start picking off those bottoms with those bear traps, right? We talk about bear traps again, but traps overall inside that free trading course, which I know a lot of you guys are kicking butt with right now because I got a ton of emails this week about you guys making money on that stuff. So well done using those traps you guys are learning in the free trading classes. So that's the way you want to go higher, right? As we go higher, right? That's the way you can make money going higher is look for those bears coming in and grab those bear traps, right? Because a little bit too low to sell down here, all right? Now, as we go higher, okay, as we go higher here, there's a couple scenarios you want to think about. I mentioned earlier that it can be very difficult to pick the top up here. And it can be, right? It can be. Sometimes these things can really, really get aggressive as they go higher. And so it can be difficult to kind of pick that perfect top. Okay, here are 3 ways that I'll be looking to short that bounce here for tomorrow. One of them is the opposite of what I just talked about. It's a bull trap, right? So as we go higher and this thing starts to look very convincing for the buyers, right? Now we look and see if we can get buyers coming in. Let the buyers buy it once. Let them buy it twice, and I want that bull trap, right? Again, it's the same basic idea as we had on the buy off the low, except now as we go higher, we start pulling back, the buyers start buying into it, right? They're thinking this thing now is a reversal. The buyers buy it once, they pull back, the buyers buy it again, right? And we look for those little tiny pops, right above those highs. This is where money is made in a bear market with deep pullbacks, right? We pop up, right? The buyers keep trying, and once we get above those swings, bam, right? All the bears come in and just crush it going lower here. That's the way I'm looking for. It's one of the scenarios. Now, another one I'm thinking about is let's say it really rips higher here. Let's say now the buyers come in and they pull back and they retest the high. Okay, this is pretty common. Again, deep pullbacks, strong move up, they may pull back and retest the high. Once they retest the high, now we can be a little more aggressive. And this is one of my favorite types of reversals. The buyers will come in, and I want to remember, the easiest money you're going to make in trading is when you can use the opposite side of the market, use their stops as fuel, right? So we retest the high. Now, professional buyers are buying low. In come the rookies with their small accounts and their tight stops. Let them try a couple times and then think about where their stops are. Okay, think about where their stops are and short into those stops. Okay, we call these failure patterns, the same stuff you guys are learning in the free trading course, right? Now, this is where the fun starts, right? The fun starts here now, because now if I can get a nice short signal, right, which again you guys are learning about in the video classes, and we drop back down now, where does the market want to go? It wants to take out that low, right? If I can draw it, right? That low. Okay, so now as we start getting that momentum rolling over now we go out, we find a new channel. We draw off that low, right? We go up, we draw off the high, and as we always say in my trade room, right? First test is the best test. Now, this could be any of the entry patterns you guys are learning in the free course, right? It could be a bull trap. It could be a buyer failure pattern, right? It could be a pullback combo. Probably not a strength trade, depending on how far away we are, right? But the goal is to go back down, right, to retest the low, right? So any of the entry patterns you guys are learning in the free class right now, which reminds me, I've talked a lot about the free class so far. I know that most of you guys are taking it right now, or you've already taken it, and you're making money with it. But if you're here for the first time, if you're watching for the first time right now, if you haven't taken that free class yet, I'll put a link up there for you in the upper right hand corner. Grab that link, take that free trading course. The strategy that I teach in that free video series will show you a really simple trick to know where the best winning trades will be each day, and I'll help you start making money with that information, with that knowledge, by teaching you 4 different entry patterns. So if you're not getting the results you want, if you're taking too many losses, or if you're missing too many good trades right now, grab that link, take that free trading class. It's perfect for someone trying to make the jump into full-time trading, and that way you can trade along with us like we do every day in our trade room. Now, a couple more things. 2 more things I want to cover, okay? 2 more things I want to cover here. Again, so we talked about making money going higher. We talked about shorting it, right? Here's one more way. Now, let's say, for example, we get that really strong pop-up, but now there are so many bears up there, right? There's so many bears up there, it gets whacked right back down again, right? What do you do in that sense? It's tough to pick the perfect top, right? It's screaming going higher, right? So how do you pick it in that point? You look for what we call the pop and grind, right? If we get something like this, where we don't get 1, 2 bull trap. We don't get that stuff, right? Now the market simply torches and runs back down and begins to grind and grind and grind, right? This happens a lot when you get a real obvious big move like that. What do you do in that sense? Whatever you do, you don't chase it. right? You don't chase it. You want to sell high. So you mark that low, you mark that high, right? You go out, you find those prior swings, and you grab that short off the high of that channel, right? Makes sense? These can be tricky, okay? These can be tricky because when the market kind of reverses off the high and it starts grinding down, you know what happens, right? That voice in your head says, you're not going to miss this, are you? Right? You're not going to miss this, are you? Right? That FOMO kicks in. So you really got to be disciplined on that, not to chase it going lower, right? Remember, we want to sell high, right? Not sell low, right? You're selling relatively low there and then short that bull trap, that buyer failure, and back down we go, right? So those are kind of the three different scenarios of how I want to short this thing as it goes higher. Now, the big question right now is remember, there's a range right here. Is there any possibility we might just rip right back higher again? Right? Of course there is, right? Of course there is. We're sitting at support right now, for crying out loud. There's definitely potential this market could rip back higher, right? The world is crazy right now. Lots of crazy stuff going on, right? You read the news. Anyways, there are two patterns you want to watch for. Well, you know it's a reversal, all right? So we already talked about the way to make money going higher, right, on the bear traps. That's the easy part. Now, let's say now we pop up into my sell zone. But now we don't get the buyers, right? The buyers don't try once, twice back. No, right? They come in and they go, no, we're going back to this high over here, right? They're like, remember, this is a range, bruh, right? They want to go back to these highs. So they jump, right, and they rip off that moving average. That's a reversal, okay? That's a reversal. Once those buyers hold and jump, right? Just like sellers, see back over here? See how sellers jumped right there? Once you see that jump, bingo, you know it's a reversal, and now you find those channels and you short the top of that channel, right? So take this pattern, the same pattern, right, we saw this morning that rolled over and dropped, is the same pattern now we're looking for over here, right? So they pop up, they don't fail, no, they hold, and they jump off the moving average. That jump, now mark that high, mark that low, and as I always say, whatever you do, don't miss that first test. Okay, it could be a bear trap below a prior swing. It could be a seller failure pattern below the 21 moving average. Use those stops as fuel. It could be a pullback combination. We know where the market wants to go. Okay, this is an easy one. We know where the market wants to go. And I'll tell you, it's a Friday tomorrow. So like I said, right, if we get that reversal, promise me you will leave a little piece of it, right, to run, because this thing could really, well, it could end up going all the way to a new pendulum, right, all the way on the opposite side. Very much a potential scenario. Again, my favorite trade is that deep pullback and a retest. But I don't care what I get, and neither should you, right? I could care less. All I want to do is make money, right? And so should you. Now, one more you want to keep in mind. Let's say we do get some bear traps down here, and the market pops up and begins to grind, right? Yeah, that's that pop and grind, right? So now we don't pull back to the moving average and jump. Nah, right? We don't pull back and jump. Now, we basically see the bears walk away, and when the bears walk away, it starts to grind. As it starts to grind, now we draw the trend line off the high. We draw that channel off the lows. You know what the game plan now is, right? You look left, you find those prior swings. Traps are, or swings are where traps live, okay? I love traps. I love them all, right? All the same setups you guys are learning in the free trading class. And again, we know where they want to go, right? We know where they want to go at that point. All right, guys? So, boy, I'll tell you, if we can't find a way to make some money on all these setups tomorrow, right, something's wrong, right? Something's wrong. So we've got a lot of great ways to do this. Now we got to wait and see what we get here. Now, I'm not done yet. No. We're definitely not done yet. What if you go sideways down here? Right? What if we go sideways down here? Nah, right? Because that's a possibility too. Bear market into a range. What if we keep going lower here tomorrow? Because for all I know, maybe we don't go higher, right? Let's get ready for that in the Nasdaq. Okay, the Nasdaq, of course, is almost identical to the S&P, right? There are three main components right now in the Nasdaq. One is the overall bear bias on the 60-minute. Again, look in the description and you'll see for yourself, right? It's a lot more difficult now to call this a bull market, right? We've rolled over now. The buyers are not holding anymore off the moving average. It's a bear market as far as I'm concerned. Could that change tomorrow? Absolutely, it could change tomorrow. Just 2 days ago, I was a bullish, right? We cannot care. I don't care. All I care about is what's my direction, and I'll go with that, right? Don't be married to what you say 2 days ago. Anyways, off my soapbox. Next one, strong move down, right? Strong move down says what? Short the pullbacks, right? Short the pullbacks, get that retest. Again, bear traps off the low, shorts off the high, right? And then, just like on the S&P, I mean, you can't even script this stuff. Look at how perfect this bear market into a range. They go up, they rotate all the way back down, and knock, knock, right? We're right there, right? So these are pendulum swings. You'll learn about these in the intermediate classes here at School of Trade, and we talk a little bit about them in the free trading course. All right, my favorite trade, again, the NASDAQ, my favorite trade is this spot right here. This 561 area right there, right? So again, bear traps going off the low, up, bull traps off the high, right? For that short, double top reversals off the high, right? V-top, pop, and grinders, you got it, right? So same idea. Same idea. And then again, if they pop it up, if they hold the pullback and they jump off that moving average, what's that? It's a reversal. Right? It's a reversal. Once they hold, it's a reversal. Mark the high, mark the low, and don't miss that first pullback, and you better leave that runner, right? You better leave that runner. Okay, so now, next question is, what if we go lower here, right? What if we go what if we go sideways? Remember, anytime we have a sideways range, the range acts like a magnet. Now, the challenge on this one is going to be we have to kind of wait overnight and see if we can get this range to develop, right, overnight. So we're going to wait patiently on this and see if we can get the range developed. The two types of trades I really like on this NASDAQ, and this would also apply to the S&P, but you'll notice the NASDAQ has a little bit, well, not a little bit, a major support level down to 12,308 half, right? A lot of support down there below us. So that's a big part of this. That's a big part of this. So the way we want to do this is I'm still looking for that pullback, right? I'm still looking for that pullback. But if we get a range though, okay, if we see a range, the range gives us a lot more bearishness, right? Let's put it that way, because ranges act like magnets. So if we get the pop up here, right, I'm really not looking for at that point some entries long. If we stick down here and go into a range, I'm really not as interested in looking for bear traps to be a buyer. I really like the bear trap below the range, right? If we go sideways and then run lower, I really like the bear trap here, right? Bears once, bears twice, get the bear trap right below that low and back up. And the reason why is because, and you will see this in the description of the video here tonight, you'll see this is a very, very big level. That 12,308 level is a major, major high from like a month ago or a couple weeks ago, whatever, right? So that level is very attractive. So if we go lower here, right? So if we go sideways here, in this bear market, I'd love to trap in some of these bears, right, at support below the range and get that bear trap back in. Now, if we get that bear trap tomorrow, where does the market want to go? It's going to want to go back to the other side of the range. And then remember, Friday, let it run, right? Let it run. That pendulum, the amount we go below the range, right? The pendulum becomes a big, big target, right? So leave a little piece of that runner. And I wouldn't blame you for just letting the whole thing run, right? Because again, Friday afternoons, they do tend to be a little bit floaty, right? They tend to grind, right, and float. So I like that trade going lower here. Now, how do we short this thing in a bear market into a trading range? We want to wait for the pop up. We want to, remember, we're at big support down here, right? Range above us. So the same basic idea applies, right? We pop up. I want to anticipate now some buyers trying to rotate back higher here again, and I want to use their stops as fuel, right? Let those buyers show their cards, right? Let them try a couple times up here. And then once those buyers, right, once they pop up, right, they pop up, try once, try twice, then we can start shorting this thing, right, and again, using their stops as fuel. So same basic idea over here, right? Let those buyers try a couple times and short that sucker back down into that trading range. And then, like I mentioned before, if they do hold the pullback, right? Doesn't seem likely if there's a range down here, but who the hell knows, right? If they break out above, if they pull back off the moving average and they blast, right? They blast going higher. Good for them. Mark that high, mark that low. Don't miss that first test, right? Don't wonder why. It doesn't matter why. The why is irrelevant. We don't care why. Okay, turn the news television off. Doesn't matter. Trade the chart in front of you. We're trying to go back to retest the high. We're trying to finish off a rotation back in the opposite direction. right? We may also see, right, it may also pop up, right, pop up and grind, right, grind, the pops and grinds, mark that, that same channel idea, right? So it's the same stuff. It's just that reversal, draw the channel at the highs and then grab that first test. All right. Hopefully that makes sense, right? Now, the final kind of question here in the NASDAQ, which also applies to the S&P, is what if we keep going lower, right? What if the market keeps going lower? If we go lower, it's almost a good thing, right? It's almost a good thing because now as we go lower, we still have the same opportunity, right? Get those bear traps to get long. In all reality, the NASDAQ has even more reasons now for bear traps off the low, right? At the same time here, as we go higher, we might get a pretty sharp pullback. And as we get a sharp pullback, same basic idea, right? They may hold it and reverse. Okay, probably not, but we'll see. Let them try once, twice, get that bull trap back down. Right? Let them go up and retest the high. Once they do, 1, 2, use their stops as fuel and short. Then grab that new channel. This is the same exact situation we just talked about on the S&P. That's why I said the stuff I talk about in the S&P can apply to the NASDAQ and vice versa. Does that make sense? Right? So bear traps off the low. If they rip it up, retest the high. Okay, mission accomplished. Now use stops as fuel. 2, try failure pattern like you're learning in the free trading course, and then again grab that new channel and don't miss that first test as they go back down to retest that low. All right, guys. And again, if they pop it up and they hold, right? They pop it up and they hold that pullback and we jump, or we pop it up and we begin to grind, that's a reversal, and now we go out and we find those first legs, right? The first test off the low of that channel. All right, guys. So if we go lower, not a lot changes. In fact, it almost becomes better for the buyers at that point because you've then got the 08 half, that big support level as we go. I'll tell you, I'm getting pretty excited about this. There's a lot of good trades here, both the long side and the short side, right? Got a good game plan there on the S&P now and the NASDAQ. How about some oil? So oil's a pretty straightforward chart in front of us, but if you go down the description, you'll notice the 60-minute time frame looks a little bit punch drunk. Remember, oil is really very news-driven right now, mostly by the situation happening in Ukraine, right? There's a lot of back and forth. We heard this week about the escalation. By the end of the month, this month, it sounds like Russia will have put almost 750,000 troops back in the scheme of things here. And anyway, so there's a lot of back and forth right now on oil. The 60-minute time frame does look a bit confused, right? You'll see what I'm talking about. Strong moves down, big pops back up. It's not as clean as the S&P and the NASDAQ, and I wouldn't expect it to be as clean during a potentially a war, right? Whether you want to call it an invasion or a situation, whatever it is. So anyways, the right now we're definitely bullish, right? We're bullish right now. But again, you'll see in the 60-minute time frame, it's difficult to call this a true bull market overall, which is definitely the reason why you would want to keep an eye out for reversal. Now, right now, we're nowhere near a good spot for reversal right now. Because right now, we have one of the most consistent bullish signals you'll probably ever get as a trader, or as a price action trader. And that is a bull market into a trading range, a move lower, and a rotation off the low. Okay, these are one of the most consistent, in this case, a bullish signal or a bullish rotation, right? As it rotates. It's a bull market into a range. The buyers bought off the low, and as the market rotates higher, these oftentimes can really punch, right? They can really punch. That's why I said it looks like $80 a barrel. It looks like it's on our radar. In fact, the buyers get what they want tomorrow. It looks like 82.43, 82.66. Again, you'll see these levels on that 60-minute time frame, and you'll see why I say that, right? So really at this point right now, the buyers are, well, for example, the buyers would love to get into this somehow on the way higher, right? So one way to do this is with this beautiful bear trap right now. Now, we just talked about this. So you guys are experts on this stuff by now. All right, you can probably see it a mile away, right? So we go lower, we pull back, the bears try once, right? To short this thing going lower, right? Bears come in short once. We go higher, right? Bears are coming in, shorting again. And if they can get underneath that 77.28, right? You'll notice that channel is just so conveniently right there. That's a pretty good spot there for, again, overall. I wish the direction was a little bit easier. It's not again, we're not exactly convinced of this bullish bias right now. I wish direction was a bit easier for us, right? But anyways, nonetheless though, that's a good signal, right? That's a good setup right there, right? A 2-try failure with a bear trap, okay? Now, think about what else we might get out of this. And this will make a lot of sense, right? So strong move up, right? Bull market, we roll lower. If they retest this low now, right? They retest the low, then what do? We look for the bears try again, right? Professional sellers are selling high. The rookies will come in and sell low. At this point now, if those bears get short once, twice, now what? Use their stops as fuel. You won't need a bear trap, right? You won't need a trap entry with that. You can use a trap entry, but not required, right? So once they go back and retest that low, then we go, and again, we mentioned this the opposite direction on the previous chart, right? But that, of course, now becomes a seller failure pattern, support level, range again is a magnet up overhead. All right. I would also be aware too, this area right below us, right? That area below us, we roll lower, right? Really strong move down for the bears. Think about this one, right? Bears try once, bears try twice, stops as fuel. We then rip higher and we grab that new channel off of that, right? Off of those highs on the way back up into that trading range. Remember, oil's a bit jumpy right now, right? So if it punches lower, don't assume it's a reversal, right? Why? Because they have to what? They got to hold that pullback, right? They have to hold that pullback. If the bears can't hold that pullback, their stops are just begging to get lit up and then price runs higher. Remember, the range is a magnet overhead. Okay, so bullish short term, mixed overall. If they do rip it lower and the bears can't continue that move lower, it's going to want to go right back up into that range. I like that little bear trap failure. And then again, any other entry patterns, right? It could be a trap setup. It could be a seller failure pattern off the low of that new channel. Now, keep in mind, right? If they rip this thing lower, if the bears come over, hold the pullback, and jump off that moving average, right? Well, now that, my friends, is reversal, right? Once they hold the pullback and jump. But again, if they can't hold it, it's going to want to go right back up again. So once they do hold it, and believe me, I hate that I can't short that, right? But you don't know. You don't, unless you have a crystal ball that works. Mine doesn't work anymore, right? But you can't trust selling that thing short. Not with a range above us. So once they hold that pullback and blast, then you can go out, find the new channel off the low, off the high, and then we can go out and structure the entry right off the high of that channel. Okay, one real easy giveaway too, whenever we see one of these 1, 2, and then jump right off the moving average, is the first leg and the third leg are symmetrical. Okay, trends love to move in threes, right? 3 legs, and the first leg, right, which in this case is that leg right there, the first leg and the third leg are oftentimes almost identical. Not always, right? But usually, more often than not, right? They're very similar. So if we do see that reversal, if we do get that reversal going lower, that first leg down, measure that. And then once you know how far that pullback is, that will give you the measurement you need now to know where, right, to know where that target is. In all reality, the bears would love to go back and retest this low, right? The bears would love to go back to Friday's close at 73.23. Right? That's kind of where we know where they want to go. But if we get, for example, right, if it pops down and begins to grind down, right? They love to pop and grind right now. If it pops and grinds, it's not as convincing, of course, at first as a pullback and a jump, right? But it's still the same thing. It's a reversal, right? That grind tells you the opposite side of the market is giving up. And once you get that, mark that low, mark that high. And your job right now is don't chase that sucker lower. Right? Don't chase it lower, because everybody who sold short on the way down is now taking profit. And you don't want to go chasing it going lower. What you do is you look left, you find those channels, those swings, and you don't miss that first test. Okay, that is a much better trade than trying to white knuckle it, right, and chase after it going lower. That's a very difficult way to make money. In all reality, you want to get in the habit of selling as the price is going higher. Right? Not as it goes lower. It's much easier said than done. I do understand. And again, right? First leg, third leg, right? Will give you a good idea of where that final target is. Remember, the easiest way to make more money is don't take more trades. Get better at making more money on the winners you do get. You know, I tell my students, if you want to make more money, don't trade more often, right? Trade more size, trade bigger contracts, bigger positions, which comes at time. You know, slowly but surely you grow your account, adding more contracts every week, every month, whatever, and then getting better at knowing how far this market has to go and be disciplined to let the trade work for you, right? That's the way you trade the reversal. Okay, now, as we go higher, how do we trade the breakout going higher? The breakout's pretty easy. So if we get a strong run up, okay, if the market really rips, right, and rips off of this low, if it really rips and runs higher, this is where two-try traps come in handy. Okay, this could also apply to the S&P and the Nasdaq, right? So if it really rips and runs higher, right? Real strong pop up, strong pop, shallow pullback, right? Barely touches the moving average and a higher high in price. Okay, we call these two-try traps or two-try breakouts. That trap low is very reliable. It's very, very reliable. All right. Remember, in that situation, it's rotating off the low. It's very bullish at that point, right? You're not trying to sell that thing at that point. It's a very dangerous short. Okay. So as we go higher, strong pop, shallow pullback, higher high, bear trap. Okay. And again, at that point now, we know 82.43, 82.50, definitely the runner in that situation. Or we take off the highs. There could definitely be a triangle up here, right? So we don't want to be buying as it goes higher, right? But if it rips going through this sucker, then again, you can use that two-try trap I just mentioned, right? But let's say, for example, though, they don't rip to the high, right? They pull back and they jump off that moving average. You know, remember, we can't trust that first leg. A lot of times they'll fail and go back into that trading range. I don't like the short side on this because of that momentum, right? That momentum off the low makes it very difficult to pick a top on these. It just does, right? You're better off, save your bullets, wait for an easier trade, right? Once you see it hold that pullback though and jump, you know what to do. Mark the high, mark the low, grab the first test, right? Could be any of the entry patterns we talked about so far, right? Traps and failures are my favorite. You're learning about those, right, in the free trading course. And again, right, first leg, third leg, that'll give you an idea of kind of how far this thing wants to go. Or it pops up, begins to grind. You know this, right? You know this. There's your pop and grind, right? And we're going out and we're trying to find, right, that first pullback off the low, right? It could be any of the entry patterns off that low. All right, guys. So a lot of potential here for a bull breakout right now. Will we get some bear traps? Will we get some deep bear traps down here? Definitely something I'm keeping on my radar, and hopefully I can use this information to make some money. Now, tomorrow morning, the game plan is set. Excellent job. I'm proud of you, by the way, for watching all the way to the end, because I'll tell you right now, if you're still watching right now, you are the person I do these videos for. All right. I know if you're still watching right now, you're dedicated, you're committed. And I'll tell you, if you're willing to put this much effort into my free videos, you will just crush it with me in my trade room. So I want to give you guys more information here. First of all, the free classes, right? I would definitely recommend, if you haven't done so already, definitely grab the link in the description. I'll put the free trading course link down there. That's a great place to begin to learn the fundamentals of how we trade in our trade room. And again, it will give you a roadmap that you can start using on your own to start getting your act together, right? Start actually getting consistency out of your results. If you have any questions about getting into the free course or into our morning trade room, whatever it is, definitely don't be afraid to call the office. The easiest way to get help is to pick up the phone and call or use live chat. We're almost always here, right? So it's pretty easy to reach us. I know I go pretty quickly in these videos, but we'll slow it down. Make sure you have all the pieces put together that you need to be successful, and we'll get you going. All right, guys? As always, I really appreciate you guys tuning in and watching tonight. If you enjoyed the video, please subscribe, hit the notifications bell, hit the like button, and don't forget to share this information with a friend, right? I really appreciate you guys share these videos with other trading buddies. Hope you guys enjoy the game. You better come to work on Monday, all right? I don't want to hear you calling in sick on Monday, right? So get to bed as early as you can on Sunday. Don't enjoy the party too much. I know, easier said than done. Come back and see us next week. But again, tomorrow morning, 8 o'clock Eastern time. Don't miss tomorrow, right? We'll finish the week strong tomorrow in our trade room. All right, guys? Keep in touch. Give us a call if you have any questions. Drop me some questions in the comment section, and I will see you guys next time. As always, thanks for tuning in. Be well, be nice to each other, and I will see you guys on Monday. Adios, amigos. Bye-bye for now.